Moving on, like we promised you, we have Devansh Jain, from the INOXGFL group. Very interestingly, the INOXGFL group has created an IPP platform where the company has raised close to 300 crores. Along with that, the group company Inox Wind has received a letter of intent from that particular platform itself for execution of 550 megawatt wind capacity on a turnkey basis. Good afternoon, Devansh. Thank you so much for joining us. First up, discuss this particular platform to us. What was the intent behind creating this platform? Also discuss and explain to us, what is the kind of fundraise that you've done? What is the dilution that has been done? We also understand a few, very important investors have come on board with this particular fundraise.
Hi, Vivek. Yes, thank you. I think it's a new platform, a business which we are very excited about. I think what we're doing as a group, we're trying to be at the forefront of the entire mega energy transition play globally. I think this is probably one sector, the entire energy transition piece, which is going to take billions and billions, if not trillions, as we move forward. And I think given our presence and strength in that ecosystem, we are trying to capture every piece of the pie. As you know, at Inox Wind, we are amongst the top 2 wind turbine players in the country. In Inox Green, we are probably the largest and the only listed O&M player in the country. We have recently raised capital also in our EPC arm, Resco, which should get demerged and eventually listed as compliances kick in, which is amongst the top 2 EPC players in the renewable arm. Across the group in Gujarat Fluoro, we're setting up one of the largest battery chemical complexes in the world. We are also in solar, green hydrogen, semicon. So with this platform, what we've really tried to do is we're trying to create more value across the group with the fact that a lot of the group companies themselves need power. And instead of investing on the balance sheet of those companies and making them capex heavy or debt heavy in terms of non-core assets, we've taken this at the promoter level, where all the debt will come in at the promoter level, given that an IPP business typically 75-25 in terms of debt equity ratio. And all the operating companies will basically get power at a fixed price for the next 25 years, which is on par with what we've been sourcing from different, CNI players in the market. It helps us because all these guys save on power cost. They get green power, which helps given that we export big time across all these entities. It creates value across the ecosystem because in all the chemical companies, we save on power cost, increase profitability.
Devansh, we get that. It's a 300 crore fundraise. So what will be the equity valuation of this particular platform? We understand, the group entity and those graphics are running on the channel as you speak. So we understand the investors have come in and they've put in close to 300 crores. So what will be the stake dilution that's happened?
So this is a single-digit dilution. Won't be able to spell out the exact numbers, given this is an unlisted entity at this point.
High or low?
Let's just keep it at single digit, yeah.
Okay, so it's a single digit dilution that you've done, and mainly the power will be used for captive purposes, or will it be used for external purposes as well?
So, at the platform level, it's going to be 3 pieces. It's going to be it's going to be supplying captively to the group. It's also going to be supplying to a lot of other industries which want, C&I, which want power. And a lot of them have approached us as a group. Why don't you set it up and give it to us? So we're going to be supplying to third parties as well. And thirdly, we'll also be supplying a part of this power on the power exchanges, leverage the power pricing which exists for the next couple of years at least.
So Devansh, you spoke about cost savings happening for your group entities. Most of them are listed, right? So definitely the investors would want to know what kind of cost savings will they see because of this? Listed companies as well, right?
Let's try and put it in the sense that typically when we're sourcing power from the grid, it's at about 50 to 60% costs, which are higher than the price at which we are being able to source this power. More than that, it's also fixed for the next 25 years, so you have no escalations. There's no risk in terms of cost of power going up. Also, it's green. I won't spell out exactly in terms of crores, but yeah, it's very substantial at the group level across all the group companies.
Versus the market rates, how much lower would this cost be? I'm just talking about percentage. Absolute terms, I know you wouldn't be able to give me an answer. How much of it will be an impact on P&L on your listed companies? in terms of percentage?
Look, rather than get into percentage, what I would typically try and say is typically power when you're buying from the grid costs 8-9 rupees. And this would be at least 50 to 60% cheaper than that, number one. Number two, I think at the group level itself, I think we're looking at savings over 150 to 250 crores over the period of next 2 to 3 years, just on current demand. As we move forward, obviously the power requirements are increasing across group companies. So I think the savings would be very, very substantial.
Devansh, two questions. Number one, would you eventually look at an IPO for this particular platform? We understand you have very large capex plans, close to 12,000 crores is what you have spelled out. So how will you fund that? So would the promoter entity be taking on debt? And number two, what is the status as far as corporate simplification is concerned? You have 3 listed entities, and along with that, all of them are pretty much in the same space. One is a turbine generator, the other one provides EPC services, the third one gives O&M services. So when will we see a simplified corporate structure as far as the GFL group is concerned?
Look, so to be fair, I think we've kind of simplified the structure to a great extent. Post the demerger of a lot of these entities and a lot of the group realignment which was happening. We now have IWEL, which is the holding company of IWL, in the final stages of merging into Inox Wind, right? So that makes it one pure play wind company. We will continue to keep Inox Green as a separately listed entity because we see huge traction on the green services O&M play. That's an annuity business, very high margins, very high growth. Inox Wind is the manufacturing arm. The third piece, which is not listed, which gets demerged and eventually gets into being a listed entity sometime next year, is the EPC arm called Resco. I think that itself is growing exponentially, not just on the EPC play, which Inox Wind does, given the order book it carries, but we're going into a lot of other pieces. We're going into hybridization of power, which plays on solar. We're going into cranes. So a lot of those pieces coming into the play. With respect to your question of how we intend to fund this, look, so the promoters have already pumped in a significant capital into the entity. And now we've gone and raised this 300. This covers us for about 600 megawatts of execution at this point in time. And the internal accruals itself can take us to about 1 gigawatt. We will have some kind of capital raise next year, which would provide us enough capital to get to about 2 gigawatts. So I don't think it's going to be too large a dilution. It's again going to be on similar lines. And whether we IPO this or whether we go in for another secondary raise is something we'll decide at that point in time.
Right. Devansh, we'll keep touching base with you as soon as developments such as this keep coming on. Wish you all the best. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.